All right, good afternoon, traders. This is Christian from Hertz Tropic Trade Group, and it is Thursday, April 30th. So, last day of the month. Kind of went out with a little bit of a whimper. I think overall, probably a bit expected. I mean, this move this week has been pretty sick, right? The names that we went over for earnings after the close was unbelievable. Like I said, when I left yesterday's video, where I left it off, I was saying I don't remember ever seeing names hit like that all together between Tesla, Microsoft, who else reported? Facebook. And what happened today? Well, a lot of those names they gave back. Some are not, or a lot of their profits from where they were in the open market. Twitter was another weird one too, where Twitter started to go up. And I didn't even see where this one finished. I did not trade Twitter today. We'll talk a little bit about some of these results too. We've got the last two, I think, big guns to report. Now, there's a lot of names still to report yet, but yeah, I mean, look at this reversal in Twitter. I had made mention yesterday. I think we were talking about ServiceNow, or maybe that was in the pre-market session that we were talking about ServiceNow and how some companies continue to deliver. Right, they managed to do that, and ServiceNow is one of those names. Did this name? I think this name held up throughout the session. Yeah, finished up 9% on the day, so very strong in ServiceNow. But they continue to be very consistent for earnings. So big difference between something like ServiceNow, right? And if we look at their earnings history, get rid of this. You could see these results that they put up time and time again. They do have a miss every now and then because nothing is certain. But look at all look at all the green price reactions, right? Versus something like Twitter, which we went over in the trading room this morning, right? So this is more about management, right? Management does not do a good job for Twitter setting expectations. They also do a horrible job. I don't always listen to their conference calls. I didn't listen to their conference call today, but clearly they do not know how to manage a conference call well. And I don't. You don't even have to listen to the conference call to know that, as I didn't listen to it. But look at what the stock did. Right, that's on them. You go up, you're higher into the call on earnings and you end up getting smoked. And this has happened to them before. So again, I don't own anything in Twitter. I didn't trade Twitter, but there are patterns, right, that emerge in earnings. Sometimes there are, not always. If we turn and we kind of look at Amazon, we were talking about this after the close. With these last two names reporting, it's tough. I think it's tough for these companies that we know to give guidance. So the numbers, what they did last quarter, usually, and I'm just kind of going over this concept. I don't know why I'm doing it as we get to the end of earnings, but there was just some questions I think about this in our trading room, that it doesn't, like the last quarter. It is interesting to see how they executed, and if they're continuing with the trajectory of what they normally put in. But something like this, where the country's been in lockdown, you always have to go back to like what the market already knows, what's already priced in. So like Amazon seems like they had a very good quarter, but it's really about like what's going to happen the next one. I mean, they've been able to do well under these circumstances. Apple's a different story. Right? Apple, again, you know that the expectations weren't going to come in, right? If you don't know that, with all the with all the stores being closed, right? So the market knows that. The market knows, and every analyst knows that the stores are closed, right? That's not an unknown. So it really depends on what the future is going to be. So why is the stock basically flat? Because Tim Cook can't provide any guidance about. He's like, this is the strangest environment that he's ever seen, as it is for everybody. So I think that's the situation, why we're seeing Apple, and that's why I've been a big seller of premium. This one I actually try to play long because I thought that people were underestimating that people are not going to throw away their cell phones. Uh, People are gonna, in this environment, and I've said this on a previous recording. People are hanging on to their cell phones tighter than anything else right now because that's how they're basically connected to the world right now with this lockdown going on. So I think your iPhone is probably your most valuable thing in this situation. Lets you go on Netflix. It lets you maybe escape from the family every now and then in this situation. So that's why I kind of play this to the long side. So I will go over my trades as usual. But overall, for today's market performance, I think that we've had if you've been bullish or if you've been following price and trend, which is basically what I try to do most, as much as possible, and try to be objective with what information that we're getting. This has been a colossal run that we've had. I think the headline that I saw was that this is like the best returning month since like 1984. So now keep in mind, that's a head scratcher for a lot of people, but it is what it is. Like the market went down huge in the month before, so it's a reversion back, and the Fed has been obviously pumping out money, and rolling out a different program basically every week. So you kind of have to take that with a grain of salt, while the country is recovering. So where does that kind of leave us at this point? Right now that we've kind of obviously had a big move down and have had a big recovery, a big move back, kind of leaves us in a range, right? And I think that's what it's telling us on the weekly chart as well. The S&P has gotten back inside value for the year. And now it could be one of these situations where we go a little sideways. I'm not going to make that call. I'm not going to make that prediction because the people who have made predictions have been wrong. If you see people making predictions, I'm not going to name any networks, but you know which ones they are. The majority of these people who are making these predictions are wrong. It's best, and I think that's where our edge is at Tribeca Trade Group, is to basically kind of just go with the momentum and go with the short-term trend, and then make adjustments along the way. Making predictions is just not something that I'm going to do. We could see that we also hit some resistance here at the 200-day moving average. Again, at this point, I think we're well in need of some type of consolidation. There was a tweet that I saw that I just retweeted from one of the follows that I like because they're pretty objective is Sentiment Trader at Sentiment Trader. They said active investment managers went to more than 70% long this week, despite a still downtrending market. This happened back in January and May of 2008 with ill effects. So you have to kind of watch along with what we're doing, which is watching the trend and watching price, which I think are the most important. Sentiment also makes sense to pay attention to. I think that was one of the issues down here was I started to see a whole bunch of inflows going into inverse leverage funds like SSO, like SH, right? That usually when that happens, those traders who are doing that are on the wrong side of the fence. The other thing that we saw was cash balances back in here were historically high. There was also, in terms of S&P futures, there was also something in terms of that, like the hedgers had very light exposure, right? So everything kind of got tilted back here, where there was not a lot of exposure to equities, big cash imbalance. And now we're looking at things, and after a big run, now that has changed a little bit. That's just by the way, one stat out there. Like in overall ETFs, like I talked about weeks ago, how there was positioning in inverse leverage ETFs, which those guys are always normally retail speculators. I hate to see it. I hate to say it but it is what it is. When they do something like that, they're normally wrong. It's just something that happens over time. I'm not saying anything negative about retail traders. I'm now a retail trader instead of an institutional trader. But you just have to realize when people get all on one side of the fence. So the other thing that I'm seeing right now in ETFs is the last week and a half, believe it or not, there's been outflows, right? So I don't think that things are way crazy in terms of exposure to equities because I've been seeing outflows, like I said, the last week and a half. So there's some things that are showing, some indicators that are showing pretty hot right now in terms of sentiment, and then there's some other things that are kind of more neutral. So I think you kind of have to take that to realize when you look at your positioning in terms of you're right. You always want to position in terms of like where the biggest bang for your buck is. And at this point, it's a good thing that we're getting through all these earnings reports, which again are kind of most of them are non-actionable really because this quarter is going to be basically thrown out without. This is a quarter for the ages, right? That nobody has been. We've been under lockdown. That I'm hoping that's going to change in the next couple weeks to month or so. Although I see some reports of other places want to keep this country shut down for months, which doesn't make a lot of sense to me. Not to get political with this stuff, but if you are following anybody on Twitter who's from Hong Kong, again, I don't want to get into the China stuff about whether or not they've been hiding information, but there's a lot of Americans in Hong Kong. There's a lot of Europeans that are in Hong Kong. If you've talked to someone there, they're basically fully up and running, and the difference is they're wearing masks, right? And I think as Americans, we're going to have to get used to that. And I am in favor of reopening the. I'm sorry to get a little bit political here, but there wasn't that much going on in the market today, so I'll talk about this. But I think if everybody takes precautions, and some changes have to take place, such as the social distancing at restaurants and all kinds of places. I think that we don't have to reinvent the wheel. If you look at what Hong Kong is doing, it seems to be pretty successful to me. So again, whenever I mention this, I have people come at me and they come at me with conspiracy theories about what the government is doing. But seriously, ask someone who that you may be able to find on Twitter that may actually live there and who's not biased, and they will tell you that it seems like if you're taking the right precautions, life can go on. You don't need to be under full lockdown. Going by what some of these other places have already experienced with this. So that's my thought on that. And I think that going back to the analysis, which is what I'm here to do, it goes back to if this country remains locked down, then again, my guess is like be careful of your exposure because it's just going to be tough for a lot of companies to do well in this situation. We have talked about before the haves and the have-nots. We talked about as well yesterday. A lot of the have-nots in the situation rallied hard. It kind of felt like a short squeeze yesterday because Gilead came out with positive data that could mean that, hey, we might be reopening the country, and some of the things like airlines and travel stocks, retail, rallied pretty hard. But these are short. Like I really, I participated in some of those trades yesterday, but just as day trades. I can't get long some of those names. So here's what we did in terms of trading today. Again, continue to kind of my whole most of my trading style for earnings. Most of the trades that I've been doing is selling premium. This worked really well with Netflix. It worked really well with the trade that I put on yesterday was Tesla, right? So we covered that. That got a little bit hairy because Tesla rallied really hard, but then gave it all back today, which again, it was kind of odd to see it go up that much. But this ended up working out really well because here was the other side of it too. Right, so overall, this trade went very well. So I did a similar trade with Amazon. If I scroll down here, I may have cut the strikes a little bit too close. I just could not find value. I was originally trying to sell the 2300, 2290 put spread. However, I could not collect much premium in it, so I had to move it up. And I'm I'm a little bit in danger here, and I made a decision. I could have sold some shares of Amazon to kind of protect that portion of the iron condor. I didn't do it, so I'm probably going to be sweating tomorrow with this thing at 2350. But we'll see. I have a tiny bit of bumper room. It's funny too, as well, as I'm just trying to point out a little bit of some tidbits or observations. Look at this thing rally into the close. It just goes to show you sometimes you would think that, oh, maybe they know something, right? Maybe somebody knows something about Amazon earnings. It's just funny how it's really difficult with the moves that we see going into earnings. Sometimes they're just completely wrong. And it's like that with option activity too. Sometimes I get a few new traders in the room, and they say, "Hey, what are you seeing for like Amazon option flow or Apple option flow, going into earnings?" And it really is. I don't really look at it because for the most part, what funds are doing is they're hedging their exposure, right? A lot of people are long Amazon, so they're either going to sell some call spreads or they may actually buy some out of the money puts, something that they can hedge. Most of the time, they're not speculating, and even if they are, it doesn't mean they're going to be right. I think a lot of people think that when they see option flow on the tape, if it's aggressive, if it's swept, that they know something. There's very small trades where they actually have a beat on something in the overall spectrum, right? If you look at all the trades that are aggressive for the day, everything that's swept, let's say that there was 100 good trades on the tape, right, where they bought aggressively XYZ stock and ABC stock, right? And the most aggressive, right, way to buy a stock. That doesn't mean that you're going to get the results that you're looking for. Will there be those trades on the tape? Yes. But if you played every one of those 100 trades where you saw aggressive option activity, maybe there's a handful. So, 5 out of the 100. Now, you're going to lose on the other 95 because the other 95 didn't know anything and are wrong. Believe it or not, that's how it works. So you have to be really, so you normally, the option activity, as I say a lot in these videos, if I'm going to follow something, it has to coincide with my system. I'm just not going to trade something because I saw a aggressive option flow in it. So, but that's just a little bit about an observation with Amazon ramping into the close. Maybe it's people covering their shorts at the last minute. I don't know. That wouldn't be a good trader, right? If you were covering your short 15 minutes before the name reports earnings, you're pretty lousy, planner. So it's one of these things where I don't understand it, but I know not to put any faith behind when I see something like that. All right, so that's it for today's recap. Final message I would say is at this point, and I've been saying this now for a couple days, but a little bit of digestion and for names to kind of retreat a little bit could set up for some good buying opportunities. But I think the sentiment needs to get washed out a little bit. So as I had mentioned in yesterday's video, right, with all the crazy price action that we saw the previous 2 days, the thing that you can control, as always, is your risk. And if you've made a lot of money in the month of April, do yourself, and I'll talk about this in tomorrow's P&L video, but do yourself a favor and make sure that you're locking the gains up and are going to wait patiently for the next really good trading opportunity, because it could be a little bit, it could be a couple days, who knows, it could be tomorrow. That's why we come in every day and we kind of look and we read the tape and we analyze name by name, and look for opportunities. So it's really difficult to predict what's going to happen day to day, but I wouldn't be surprised if we get a little bit of I'm not necessarily know if it's going to be a shakeout, but at least some digestion after the run that we've had the last couple weeks. All right, guys, I'll leave it there. Have a great night. See you tomorrow.